First off, I truly appreciate you guys for taking some time out of your night to come listen. Hope you had an awesome weekend. So tonight we're just going to do a short and sweet session, just a couple of stocks to watch, and at the end we'll talk about some preparation for 2023. All right, so I know everyone's going to ask me about my SPY and QQQ analysis, so we'll just get that out of the way first. So, all right, here is what I have at the moment. Let's pull this puppy in. So if you see here, the gap was already filled. The gap is filled on SPY and it's not been filled on QQQ. So that's something we want to be aware of. And there is Corona lows anchored VWAP right there. So until we go above 385.50, we're still going to be bearish. If we can secure that and claim it and find that as a new support, then we have this gap up to fill, right? And then if that happens, then we're pretty good to go into like 390, 395 at this initial breakdown zone, right? So then going back into the actual, what I said about it, right? So the bulls, they want to hold this 50% Fibonacci retracement. If the bull volume steps up, there is that gap to fill at 388. If the bears step up at 395 though, right? This initial breakdown zone, if we start seeing a rejection here, this is a very bearish confirmation. And this is actually a pretty good spot to look for some swings into next year. So I would recommend anywhere from like February to April, depending on, how large your account size is and everything like that. I wouldn't necessarily really recommend January swings. They're just not really too far because we want the time exposure to potentially catch, like a 30, 40 point move. So if anything, I would recommend at least February. But if bears do step up at 395, say hypothetically we bounce and we fill the gap and we come back to test this initial breakdown zone and we don't claim it and we don't, push above like 396, then that's really bearish. And the next target wouldn't be until like at least 380, and then probably somewhere down here in the 370s and 360s. Something to keep in mind, the weekly time frame was honestly pretty abnormally high with the volume this week. So as you can kind of see here, the last couple of weeks, we didn't really get that much volume and since September. Right, so that's something to be aware of, because if the bulls don't step up today, then the next, well, technically this week, then we have 379 on the Fibonacci. So the 50% Fibonacci from recent low to recent high. So if that doesn't hold, then the next real area would be the psychological level of like 375. So those are some short-term levels. Now we have to remember we are coming into the Christmas time period, so the volume, it could be a little bit lower today, or not today, this week. And also the market's going to be 4 days next week because Monday is going to be off. So just some things to keep in mind. This entire analysis to like 395 or like 370 probably will take like at least a week or two. So don't just think it's going to, take 2 days or anything like that. But that's just kind of the initial scenarios that could potentially happen. If we don't hold 381, right where this gap was at, then we go down to the Fibonacci region and then probably like 376, 375. If we do bounce, if we do reclaim this anchored VWAP of about 385.50, right, then we have a gap up. And if that reclaims, we hold here, then we have 389.50, 390, the psychological level, and then the breakdown area. No, the market is closed next week. So after, so on the Monday, I'm almost positive it's closed on the 26th. I could be incorrect, but I'm almost positive because it's right after Christmas. Well, yeah. And then same thing after New Year's Eve. So the Monday, January 2nd will also be closed. So just some heads up. Also some things to think about as well. Just let me take a step back. So not too much economic news, because most of the economic news was, last week with the FOMC, CPI, all that stuff. So now something to be aware of that sometimes people get a little bit misunderstand is they only really filter for the United States market. You don't really want to do that. You actually want to know the overall news for all of the markets, right? Because yes, just because this is Canadian market, it still will affect us. So the Canadians on 8:30 at Wednesday will be reporting CPI. So I can almost guarantee you around 8:30 Wednesday, there's going to be some, some volume for our market at 8:30, right? So definitely keep all of these different things on watch. So Wednesday, Thursday, and Friday will probably be the bigger tickets. Monday and Tuesday, nothing super significant, but probably Wednesday and Friday definitely because of the GDP and the CPI. So that's some things to think about. But yeah, that's pretty much my SPY overall. The bulls need to hold 379, 380. If we don't, we go to 375. If they do, we can potentially see already up to like 395, that initial breakdown zone. If we do reclaim that, then we go to 400, the next major psychological level. So I already kind of posted my my QQQ analysis in the chart in the chat today, but just to kind of go over it one more time. So QQQ did not fill its gap yet. So tech could still see a downwards trend. So there's two major scenarios that could really happen. So this 372 or 272.50 can become the new short-term support. And we make a nice little relief rally up to either 275 and then just kind of, flush back on over and roll over at 275 area. Or we bounce strong here and make our way all the way back up to 380 region at this initial breakdown. So this will be considered a retest of the initial break. So if we don't, if bulls don't step up here, that's going to be extreme bearish confirmation, right? So then same exact thing with SPY. We could enter shorts for a leg down, and we already know our major target. This gap fill will be the major target of 268.50. Now, if we don't catch much bullish sentiment in the morning or Monday, Tuesday, then we could just potentially roll over and fill the gap first. And then if we fill the gap, there's a daily trend line right here. So that pretty much lines up right at the gap fill. So there's a pretty high chance that we will catch some aggression here somewhere to probably bounce up for at least some sort of relief rally. So those are two scenarios that could happen this week in the first couple of days. We either don't hold 272.50 and start filling this gap, or we hold and make our way back towards this 280 area and either reject and flush, or we reclaim and then we would go to like 282, 283. So those are some scenarios for Qs. Remember, we want to have multiple scenarios in the back of our head. We don't want to just think one side. There's multiple things that can always happen. So we want to be prepared. But now that we have multiple scenarios, so now we can be a little bit more prepared. I didn't really check the overall futures just yet. What is futures looking like? I mean, relatively flat so far, nothing super significant. The most amount of volume will start coming in like 4 or 5 hours anyway, so it's kind of hard to tell what's going to happen. But anyway, that's pretty much QQQ and SPY analysis. So a couple other things I was looking at. Let me see here one sec. Oh, also, let's talk about the Dixie. So the Dixie, if you don't watch that, I would highly recommend watching that. That's the dollar. So historically, over the last year, about 95% of the time, the Dixie and the indexes have been inversing each other. So what that means is if the Dixie goes up, then SPY and QQQ will go down. If it goes down, SPY and QQQ will go up. So, okay, let's kind of give a real life scenario of what that looks like real quick. One second. So we'll go on a daily for both. So you can kind of see already. So like if you look right here, So SPY is going up. Look what the Dixie is doing over here. Dixie's going down. SPY is going up. Now SPY is going down and Dixie's going up. All right, so this, like, seeing this type of stuff can help you potentially time market tops and bottoms a little bit easier, right? Because right here on like this 103 area, this 105 to 103 area has been significantly, you can kind of see here we've caught pretty significant like bounces in this area. So what I mean by that is if you look here within this box, so 1 time, 2 times, 3, 4, 5, 6, like we've been in this box very often throughout the last 50 years. So this area has been very, very key. So if you look here, we actually bounced right at this area, right? So then you can kind of see what SPY has been doing lately. So 4 hour, and we came to this key area, and if you knew that that key area was there and it gets defended, so if Dixie bounces here, what do you think is going to happen to SPY? Right, so SPY goes down, Dixie bounces. So if Dixie continues to continue higher and higher and go past 105 and 106, SPY is going to continue going lower. If Dixie rejects off this 105 and continues lower, then SPY and QQQ are going to catch a bounce and rally back up. So definitely, if you don't watch the Dixie, highly recommend checking that puppy out. Very, very useful, especially if you are an index trader. It's very, very useful. So that is on the Dixie and the indexes. So we'll do a couple of stocks to watch. I have a couple, EA, Tesla, DDOG, and Caterpillar. So for EA, had a nice bullish reversal, end of the day Friday, bounced off a daily trend line, potential continuation to the upside. And bulls, all they really want to see hold is about like 121 in order to confirm this thesis. If we don't hold 120/121, then here's our downside targets. So then going to the chart real quick, there is the trend line that held. And here's the initial breakdown zone. So that's where the target would be, right? That 124, that's where the target's coming in. So then if you look on the smaller term time chart, had a pretty nice reversal right at the end of the day for the last 2 hours, right? So nice reversal, had a doji, showed indecision right at that trend line. So basically the buyers and the sellers were agreeing on price. The sellers could not continue flushing. So the buyers actually stepped up. All right, so this is something to watch. It's relatively pretty cheap, and it could potentially hit up 124 to maybe 125 within the next maybe 2 days. So, or in the next day potentially, because like it is known to move a couple dollars a day. Like this is $3 right there, right? This is, $4 or $5 right there. So quite possible it could continue up. If it doesn't, if it rejects like 122, 123, then we already know our target. 120 is the target, and then 118, 117. So that's EA, pretty cheap. Tesla, everyone's favorite. So on the larger term time frame, Tesla's at a very, very key spot. So it's below the weekly 200-day moving averages. It's on top of the anchored VWAP from 3 years ago at 150. And currently the price action sitting on a very major weekly 300-day moving average. So bulls need to see this 150 level hold, or this will continue to flush very, very easily. So another reason why it's been retracing a bit recently is because Elon has been selling his shares again. So, but Tesla is becoming quite oversold. So a relief rally, or at least a relief bounce, would make sense. And I'm targeting about 165. So then to pull up the chart, 1 second. So this orange line is that 300-day weekly level. So if we don't hold here at this 150, we can definitely continue lower. So that 165 area, the reason I'm saying that is because you see here, this is the initial breakdown out of that little flag, right? So that's the retest. So And if we don't hold 150, we have a little bit of a weekly demand zone right here, but it's a pretty large one. It's anywhere from 147 to about 130. So it's actually about like 146. Yeah, 146.50. That's where I got that 146.50 target at. So if 150 doesn't hold, the next real area wouldn't be until 146.50. So definitely good opportunity either way, right? If 150 doesn't hold, we come down to somewhere in here. If it does hold, then we go to at least 155, 160, and then 165, potentially even 170 over the next week or two. Right. So, because if you look here, Tesla got sold to shit this week, right? Like that's a 16% retracement in 1 week. So the likelihood of it just continuing to flush like that again and this, the next following week is very unlikely, because at that point in time, that would be, 25%. So there's probably some sort of relief bounce coming through. So just keep that one in watch. Also a relatively pretty cheap name to trade. Another one is DDOG. Recently broke out of a massive weekly level. Broke out last week. The price action retested the initial breakout zone, 76, found support. As long as this region holds, price action can make a nice move back to 80, 85. The thesis becomes invalid under 75. Also has a nice double bottom setting up. So pulling up that chart. If you look here, there's the weekly breakout. Right here on the daily, we actually come back and retest this area. Right, so we retested the area. We're potentially starting to bounce off this, off the low. Right, so there's the downtrend. There's the potential reversal candle. So if we can potentially, have our next daily candle form above it, right, that's a good confirmation of a bullish reversal. And then we can potentially come all the way back up to here and the one, like the 85 zone. So DDOG is another one that's relatively pretty cheap. If it doesn't hold 75, then this is washed. And I honestly don't really care about it to the downside. But if you do want downside levels, probably like 73.50 or about $72. I'm mainly interested in the upside because it's this is a nice retest area, right? So gives us pretty decent risk to reward to play around. Another one that's relatively pretty cheap, it's like $200-300. So all of these are pretty affordable for small accounts. Last one was Caterpillar. Now Caterpillar could, just be aware, could take a little bit longer to play out. But I feel like when it does play out, this puppy is going to move, right? Because if you look here, this is on the weekly time chart. This is a big ass flag it's in. And it actually broke out of an even bigger one, right? So there's the bigger one it broke out of. It's kind of holding above that. So as long as it finds a support here in the 220 region, 220, 230 region, then that's deemed pretty bullish. Now, like I said, this could take a little bit longer to play out, but once it does, it's pretty simple for this to go to like 250 pretty quickly. Because when Caterpillar runs, this shit runs. Like this is 1 week candle. It ran 30 points. This is another week candle. It ran 25 points. So like when it runs, it runs very well. So just keep some alerts on this puppy. You can day trade it if you want, because it did just bounce off of the lower end of the trend right here. So if you look here, it's been consolidating, right? Consolidating high, low. So you were kind of chasing at this point because it had a pretty nice Friday. You might end up getting some continuation up to the top side here. So if you want to day trade that, feel free. I'm mainly more interested in swing trades because when it breaks out of this consolidation, it should be a pretty easy 245, 250 rally. Also, Caterpillar is pretty cheap. So that's my main watch list for the week. Just indexes and a couple stocks. DDOG, mainly interested in swinging. Caterpillar swinging. Tesla and EA are pretty decent day trades. Questions, thoughts, anything you guys want to chat about? Anything you're confused over? Awesome. Okay, so let me get over one thing I want to talk about, and then we can open up to watch other stocks. So if you have any other stocks you have on your radar and want to share it with the group, feel free. We can talk about some of them. But let me just get over one quick topic real quick. So last week, just to refresh everyone's memory in case you were not here, we talked about the importance of reviewing trades, reviewing overall price action of the day, finding similarities, and pretty much the analogy of trader one and trader two. If you haven't watched that video, I would highly recommend watching that. Very, very helpful. But going forward into 2023, the preparation is very, very important. So I remember I touched on, journaling your trades if you haven't, reviewing price action from that specific day and comparing it to past events, because that's how, if you look here, in case you weren't here for that lesson, this will be pretty helpful real quick. So if you look here on, just to showcase what I mean really quickly. So what Monday was it? It was Monday the 5th and the 28th. The 5th. Here we go. Yep, here's the 5th and then the 28th. Okay, here we go. Oh, not that one. There we go. Okay, so this is what I was kind of talking about in our last class, is the importance of reviewing price action, right? So because this one happened the week prior, pretty gosh darn similar to this one. Not completely similar, but it has the same components. We had a gap down overnight, right? We had a failed breakout in the morning, right? We had lower highs, lower lows the entire day. 1 o'clock is when we had that secondary leg down right there. So like all of these are, they're similarities, right? And on the surface, if you didn't really notice this and you didn't break it down and you're just looking at it from the surface, it's like, oh shit, this is a bearish downwards day. Like that's it. But once you actually pick it apart, then you start, reading in between the lines. And when you find these similarities, you can capitalize on them, right? So that's important. But anyway, that's we talked about that on our last class, so I'm not going to go into it, but I just wanted to kind of, refresh your guys' memory. What I want to talk about this one is the importance of finding your specific setup. So whatever you like to trade, let's pretend, a lot of people in here are reversal traders, a lot of people in here are breakout traders, whatever the case may be, whatever you like to trade. So you want to specifically go back in time and find out so like, okay, let's give a real life example. I like to trade reversals. I like to trade off of low of day or high of day primarily. So instead of giving myself a blanket answer and be like, hey, I'm a reversal trader off of low of day, that's it. But it's like, okay, that's not very much information to go off of. Like, what do you look for? What criteria do I want to trade? Because there's a low of day reversal that's a good setup, and there's a low of day reversal that's a pretty subpar setup. And you're not really going to know the difference until you review price action from the past. So what I mean by that is kind of spend some time over the next couple of weeks before 2023 and really figure out what works well for your strategy. So in my case, low of day, we'll use that as an example. I would go back in the last, say, 3 months and find really, really good examples of when a low of day reversal happened and it ended up becoming a continuation, right? Like it bounced off the low of the day and it continued up a couple bucks, right? So that's a good trade. So you want to find a couple different examples of that, like 5 different examples. And then once you start comparing all these different examples, you'll start noticing similarities. You want to break it down as much as possible. You want to break it down the time of day that it happened, the length of the trade, like how long it took from the bottom to the top, how on average, how much did it move? Like Was it a pattern? Was it a catalyst? How did the day prior do? How did the next day do? Like all of these different variables you want to be aware of, right? You can't just be like, okay, I'm a low day reversal trader, but like you're not really giving yourself much to go off of. But once you actually have real quantified data of past examples that really, really worked out, now you start understanding, hey, this is actually a pretty good setup. I've seen this happen in the past and it's meeting all of my criteria. So once it's meeting your criteria, this is actually a go ahead to take that trade. So breaking it down further, let's say out of those 5 examples that I reviewed, I noticed 3 overwhelming similarities. Like every single example, 5 out of 5 times, there was 3 similarities every single time. So now that I know that, I can start figuring out what is a really, really good setup versus what is a subpar setup. So what a really, really good setup would be is all 3 of those criteria are showcasing again in the future. And if I see that, I know because I reviewed price action in the past, it's like, hey, shit, the last time this happened, 2-3 weeks ago, this shit rallied 10 points off the low. Like I want to be aware of that. And once I start seeing, I like to call it my golden rules, like my golden criteria checklist type of thing. If that showcases and all of my perfect scenarios, my perfect criteria are being showcased, so like 3 of those things are being showcased like that happened in the past, right? That's my go ahead to be aggressive, very aggressive, because those opportunities don't happen often. They might happen 2 times, they might happen 3 times a month, right? So now that we know what we want to look for and we know that it's a very good setup probability wise, in the past it's worked out very well. These are the trades you want to be aggressive on. These are the trades you want to be sizing up on, and you want to be milking as long as possible. Because also, if you know what you're supposed to be looking for, you know how you want to trade them. So instead of being searching for the trades, you actually let these trades come to you because you know what you want to see, right? So let's pretend we'll give a good example versus a bad example. So I have my golden rules, my golden criteria. I have all 3 of them, right? So if all 3 of them showcase at low of day, that's a no-brainer trade. I'm taking that trade every single time, every single time. Whereas maybe there's another example where I'm only getting like 1 of that, criteria showcasing, which isn't horrible, right? But it's not the golden trade, right? It's an average trade. So I want to trade it as an average trade. So I'm not sizing up on this, right? Because I know that, yeah, sure, it can work out, but the probability isn't as high as if it was 3 criteria being met versus 1, right? So now I can deem this as an average trade, right? So I'm gonna trade it as such. So I'm gonna use my normal size. So let's give an example. So let's say my normal size is 6 contracts, right? I'm gonna trade that average trade with 6 contracts. Whereas if my golden trade, all my 3 criteria showcase, that doesn't happen very often, I'm not using 6 contracts. I'm using 8. I'm using 10. I'm using more size on purpose because I know historically that this shit, if it works really, really well. And if you can nail one of these trades down just 1 time a month, that 1 day can make an entire month of profits. Like literally, sometimes even a quarter. If you trade it correctly, if you know what you're looking for, if you know how to trade it because you've reviewed the price action before, and if you be prepared, 1 day can make you 90 days worth of profit if you trade it correctly. Therefore, when the golden trade presents itself, I'm not going to scoff at that. I'm taking that trade. I'm sizing up on it. I'm being aggressive with it. I'm still going to use risk management because sure, it can fail. Absolutely. So I still want to, obviously if it's not going in my favor, I'm cutting it. But if it goes in my favor, I'm going to milk it as long as possible, right? I'm not going to cut out after 50 cents because I know historically this thing is able to run $5, $7, $10. Why would I cut out after 50 cents? I'm going to feel foolish if I cut out after 5 minutes and then an hour later it's up $6. right? So like that's just foolish. Obviously, you want to take profit along the way, right? You're not just going to hold through it. You still, you still want to use correct risk management. You still use stop losses. You use trailing stops. You take profit along the way, like all the same thing. But the only thing that's different is when you find this golden trade, you treat it as such. You put that shit on a pedestal and you act like it's the perfect trade, because it is the perfect trade. Historically, when you saw those criteria set up 5, 10, 20 different times, on average, they work out really well. So you don't want to just disregard this. You want to be aggressive on purpose. So now that you know what you're looking for, you now know the difference between a good trade, an average trade, and a subpar trade. So we already talked about the average trade. It only has like one criteria. The gray trade has all of the criteria. Now the subpar trade has none of the criteria. It has 0. So now why would I trade that? I'm forfeiting those. I don't even want to trade them. If I do trade them, if it looks okay, it looks all right, but it doesn't look, it doesn't look like my average trade. It doesn't look like my perfect trade. It looks subpar. I'm going to treat it as subpar. I'm not using my full size. So if my full size is 6 contracts, I'm using 3, because now this way I have some skin in the game. If it works out, cool, whatever. If it doesn't work out, I'm cutting for a small loss. So now we know, because you don't treat every trade the same. One trade is subpar, one trade is average, and one trade is perfect, right? So we want to use different sizing and different levels of aggression accordingly. Perfect trades, you size up, you be aggressive. Average trades, you treat them as average. You use your average size, and exactly the same. You just use your average size. Subpar trades, you either completely forfeit them, you don't even entertain them, or you treat them as such, subpar. Therefore, you size down, right? So now, once you start doing this and you start reviewing, the trades in the past that have worked out, whether they be high a day, low of day, bounces, rejections, breakouts, whatever the hell you like to trade, review that setup, find similarities in the past that have, kept showcasing timestamp wise, volume wise, like anything, like pick it apart as much as possible, and you'll literally shit yourself of the amount of similarities that showcase when you start like actually, the analogy I like to think of it is when you think of stuff on the surface, people are just like, they look at this chart and like, okay, this is a downwards day. That's on the surface. But once you actually start breaking it down piece by piece by piece, and figure out the day prior, the day after, like break it down entirely, you'll start to really, really start seeing so many different similarities, right? And also, it's kind of like at the moment when you look on the surface, you're pretty much attempting to peek through a keyhole, right? You're looking through a keyhole. You don't really have much information. Whereas if you open the door, you actually have much, much more information. So that's the difference. This is the surface level where you're not really looking at shit. And then if you open the door and you piece it apart, piece by piece, time frame by time frame, everything like that, that's when you open the door and have much more information and can capitalize off of that. So that's something that I would highly recommend doing, especially if you don't really know what strategy you're doing or anything like that. I would recommend going back in time and just reviewing price action of days that have worked out really well for whatever strategy you like to use. And then just literally just start taking notes about it. Just compare, I would say 5 different really good examples and just compare them and find similarities and make a checklist out of yourself. Like, okay, out of these 5 different examples, it looks like 2 or 3 of these, similarities keep showcasing every single example. Therefore, I want to put this on my what is known as my golden checklist, right? If that golden checklist, every box is being marked, those are the trades I'm aggressive on. So I hope that helps. That's some homework for you guys over the next couple of weeks. So now you'll be more prepared going into 2023 of what you want to trade, how you want to trade it, and the level of aggression and size you want to use. Any questions or comments about that? Are you guys confused about that at all? My golden checklist is entirely different from yours, probably because I'm a low day and high day reversal trader. So what I mean by that is if you're a breakout trader, our checklists are entirely different. Therefore, do your own shit. Find your own stuff, bro. Because like I said, everything is different. If I'm a low day reversal trader and you like to trade initial breakouts, me telling you my checklist is entirely doesn't even matter to you because we're doing entirely different things, right? Entirely different things. So once you start doing it on yourself, though, one, it actually really helps you with your self-confidence because you're finding it yourself instead of just, having someone do it for you. It really, really helps you with your trading confidence. It's going to take you some time. It might take you like an hour, maybe a couple hours, but honestly, it's going to be really worth it. And it'll help you going forth in 2023 to figure out what the hell you want to trade and how you want to trade it. Right. So it's very, very, very important. Obviously, volume is definitely for every example. Like volume is clearly every single example, but there's more into it. There's the time frame, there's catalyst, there's like how much has it retraced so far, how much has it bounced so far. Like there's lots of different things into it. It's not just a broad blanket of volume. Volume is in every example. There's just more to it. In our last video we did last week, I showcased some of my journal. So I kind of talked about how to break things down. So that's something, if you want to go back and check that video out, highly recommend it. So I talked about my thought process of how I journal and how I break things down. But my golden checklist can look entirely different from yours. So it's not really super helpful for you. It'd be much more liberating to you if you just do it yourself, and it will also help you gain a lot more confidence. Hold on, let me check some questions real quick. Also, by the way, I hope that helps. Jimmy said, are you doing any more mentorships? I missed the last one. Yipper doodle do. I'm doing one in January, actually, in a couple weeks. It's gonna be 30 hours long. They're about 3-month duration. So if you're interested, feel free to message me. I appreciate your interest. Next one would be, do you have any tips on what to look for technical analysis when you're looking to sell puts? Now, are you selling puts so SL, just to give a follow-up. Now, when you mean selling puts, are you talking about being an option seller? Or are you talking about buying puts and then selling them as an option buyer? So I'm just trying to figure out, are you talking about being an option seller here, or are you being an option buyer? Okay. Option seller. I just wanted to make sure. All right, hold on. Let me read your stuff again. Do you have any tips on what to look for technical analysis when you're looking to sell puts? Yeah, so I'm assuming, are you doing cover calls here? Are you doing like put spreads, like credit spreads? Like what exactly are we doing here? Okay, so credit spreads. Okay, so I'm assuming you're doing call credit spreads, which if people are not familiar with, that is actually bullish. It sounds it. So bull credit spreads are actually bearish, right? But anyway, so what you would do is when you attempt to collect the premium on that, you find very, very, very heavy areas. So selling naked puts. Okay, I see. The same type of thing still applies though. So what you want to do is you pretty much want to find extremely large resistance areas or support areas, depending on how you want to do it. If you want to sell naked puts, if you want to sell naked calls, depending on which section you want to do it on, depending on the credit spread. But all you really do, just to kind of sum it up in a nutshell, is you find an extremely large area, either a support or resistance, and then you sell it above or below it. So if you're looking to collect premium, you just want to be a little bit further out of the money. Just so in this case, because all you really care about is that option buyer expiring worthless. So that's another thing. sometimes people go like a little bit aggressive and get more in the money and at the money. I personally don't do that. I like to do the more hands-off method and go out of the money on purpose. Now, yes, sure, I'm not collecting as much money, but the likelihood of me, in a sense, losing is very unlikely, right? The option buyer will probably expire worthless. So going a little bit out of the money, especially either above or below a really, really key level, just kind of helps you have an even higher probability of collecting that premium. I hope that helps. I don't want to, because I know some people in here don't sell options or anything like that. So hopefully, kind of made sense. I don't want to go completely off topic here, but I'll do, if you do want me to do like an entire, selling options class, we can do something like that. But just in case people don't really know what I'm talking about, I don't want to completely get off topic there. That'll be for another day. But that was a good question. Appreciate you. Hold on, let me scroll back up. Could you finally post the Zoom recording you did 2 weeks back? Yeah. I honestly forgot about that. Thank you for reminding me. I'll do that for us this week. Appreciate you. Do you have the same stop loss for every trade? No. Depending on where I enter, my stop loss will be different. So if I enter at a nice time, maybe at a really nice bounce or a really nice rejection, my stop loss will be tighter because I entered at a nice time. If I entered a little bit late, but my analysis is still on point, like the thesis is still valid at the moment, but I entered a little bit late to the trade, my risk reward is going to be skewed. Therefore, I have to be okay with widening the stop loss. So it really honestly depends on when you enter a trade that kind of dictates what your stop loss will be. Hope that helps. Any other questions that you guys want to chat about? Do you guys want to talk about some stocks you're watching? We can go over a couple different stocks if you'd like. Happy to help, James. I'll stay on for another like 5 or 10 minutes, and then we're gonna skedaddle for the night. Tesla's dying. Heck yeah! If it doesn't hold 150, that puppy goes to 145. QQQ already did that. It's going to be in the recording. Just watch the recording when I post it. I'll post it a little bit later tonight. I also, in the chat, I talked about QQQ as well. And I actually posted it in the chats like a couple hours ago if you want to check that out. Yeah, I'll post a video on YouTube. So Marvel Technology. Check it out. Well, we're in a big old consolidation, potentially a bearish flag. If we don't hold this bottom side trend line of about $38, then we come down to 36.5 to $35. If we hold and bounce off of this, then we go to $40, next psychological level, and then we can potentially move our way back up to the top side of the trend line at 45. But we are coming into a pretty decent demand area. Lots of different liquidity has been sitting here in the past. If you see here, right, so like within this area, there's been a decent bit of, rejection, bounces, rejections, bounces, rejections. So this area is going to be pretty heavily guarded at the moment. So I hope that helps. BA, yeah, I know BA, people have been watching BA. BA has been interesting lately. So we had a really nice breakout of the downwards trend recently, and then we actually are coming back to retest that area. So if we retest it and form a higher low here and hold like 180, 181, it can potentially spring back up to about 190. So if 180/181 does not hold, then we come right back into the area right here, and we can be at like 178.50, maybe even to the bottom side of like 175. Hope that helps. Thoughts on the 2008 versus 2022 crash comparison thoughts? It's looking gosh darn awful similar. Very, very similar. So I'm very curious to see how that sets up. We'll do 2 more and we'll finish out. didn't Nike just have earnings, or is it earnings this week? Earnings are this week. So honestly, doing the analysis for it right now is kind of out the window because anything can change after Tuesday. So if anything, I would just pretty much disregard this until Wednesday. And then just trade potentially a post continuation trade. So then we would just go back in history and see, okay, this gap down, we had a 3-day reversal off the low. This one had 2 days, and then we had a 3-day reversal. This one we actually gapped up on and then gave it all back a couple days later. This one we gapped up and didn't really have much of a follow through. So then that's kind of what you would want to do with these post earnings names. You would just kind of go back in history and see what's potentially possible, what can happen. But as of actually trading this before Tuesday, I wouldn't really bother because the IV is going to be extremely juiced and you don't really want to deal with that. But I like how we're coming to that initial breakout zone, right? Because this is the little pennant flag we broke out of. So ideally, we would like to hold here. If we hold here, we could spring back up to like 110 pretty simply. We'll do meta real quick. I don't know, boys. This looks kind of looking potentially like a double top to me. I don't know. So if we don't hold, let's say like probably, let me see here, like 118-ish, we can probably flop back down to 115. But if we do hold 118, 119, we can spring back up to 120 and topside 125. And we already filled the majority of the gap. We still have a little bit here. So if we do hold here and we reclaim 125, then we can come to that gap fill. But at the moment, I don't really like how this is potentially setting up to a double top. And right, because we haven't really fully completely retested this area. Yeah, we did a little bit here, but if this does double top, this puppy can come right back to the initial breakout zone of like 110. So it can just come right back down. So I kind of keep this one on watch. It can go either way, but I'm leaning a little bit more bearish on this puppy. Any other questions? Anything you guys want to chat about before we end our lesson tonight? Oh, I know some people are asking about my contact information. Hold on, let me post that in the chat real quick. Did I do SPY analysis? Yes, we did SPY and QQQ right at the beginning. It'll be in the video. Don't worry. Yeah, no problem. Hold on, let me post AMC. All we care about is $5 holding. That's all we care about. Because we were looking for a potential, because this is the trend line that's been holding for a while. $5 held. So all we're really looking for is a catalytic play of the avatar coming out this weekend. Well, technically, like this current weekend, it's not this upcoming weekend, but you get what I mean. So now the reason why I put on the AMC swing is because historically, when these really, really large ticket names have came into the theater, AMC usually has a rally that upcoming week. So that's pretty much my theory. So if we don't hold $5, I'm just going to take the loss. But if we do hold, then this can easily go to like $6, maybe even upwards of, let me see, where are my levels at? $6 is the first target, and then 7, and then we come into this major area of like 750 to $8. So we have like risk reward wise is pretty decent. We're not really risking very much for a potential decent upside. So I hope that one helps. By the way, here's some contact information if you'd like to get a hold of me in chat. If you want to talk shop, if you want me to review some of your trades, if you just have general questions, always happy to help a fellow trader. I know some people are in here inquiring about a mentorship. In case you came in late, I am offering one starting about midway through January. It's going to be a smaller class, so I'm able to focus on people, 30-hour duration, 3 months. Pretty much teach you as much as I know. We'll go over multiple different strategies, breakouts, reversals, selling premium, selling options, all the different stuff I've learned over the last couple of years. So if you're interested in that, always happy to help. Just message me and we can chat about it. Appreciate you guys so much. Thank you for taking some time out of your night to come learn. Hope you learned some dope stuff. And if you think of stuff after the fact, feel free to message me. I drop my contact information in. I'll post this video here in a little bit in case you came a little bit late. But anyway, appreciate you so much. Enjoy the rest of your night and toodaloo. Good night.